Hey, what's up you guys? This is Junior Trader, and in this video we are taking a look at the market, S&P 500, Nasdaq, and then tech stocks, Microsoft, Apple, Google, Amazon, Meta, and Netflix. It's a bloodbath today, or is it? Is it? Is this the time to just become bearish and just run away and market is just gonna plummet now down to nothing? Is that's what going to happen? So in this video, we'll talk about everything through the lens of technicals, the price action, and let's see what the market is doing. Now, before that, I also want to let you know, none of this is any financial advice and it's only for education purposes. Please do your own thing, guys. I'm just sharing here my opinion, nothing more than that. All right, so SPY, what are we seeing? Oh, Junior Trader, it's a red day. Yesterday, you talked about the only way this thing can cool off down to this blue box at 20 days moving average if we take out this green candle. Guys, I said it and it just happened. Oh wow. All right, well but yeah, that's what you get by being in the market for more than a decade, is the experience, right? When do these how do these moves happen, right? So all right, let's clear up the picture. Let's just for one, I don't know how much news you have seen already today, how much FOMO or negativity in the media you have already seen today, because market has been selling off, right? Like so many, look at these tech stocks. So just, for a second, just clear up your mind. Forget everything that you just saw throughout the day in the media of how now they might be showing you, oh, the market is going to crash or whatever, right? Or wherever, whatever you are seeing. Just forget that for just a second. And just look from the lens of technicals, because news media will always talk about when the price action has made the move. They'll just show you people who are conforming to those biases, who are now they will be bringing out all the bears, right? And yeah, so it's just a game they play, the cherry pick. Now forget all of that, just look from the eyes of technicals. What is the overall structure on SPY first, right? The structure is higher highs, higher lows, higher highs, higher lows. We have this red candle, but where did this red candle come? In the extension, right? And what do I say? Take profits in the extensions, and the time to reload is in the pullbacks at the structural support areas. All these pullbacks that I have been talking about, like all these great moves that we made, right? To the upside. This one red candle is not changing any structure, all right? This is, we are talking about S&P 500, all right? Now, until $550, we can't say that this is the top. If we do cool off, keep selling off until 550, it has to be taken just as a pullback. It doesn't mean that it's time to buy here on a red. Oh, it's a dip and it's bullish structure is buy. No. Let the price action do its thing. As long as structure is holding, let the pullback continue, and when on the lower time frame you see double bottoms forming, consolidations forming, higher pivots forming, and the structure is overall bullish, that's the time to reload with the stop loss on the other side of the structure. Now in case of S&P 500, that is the level of 550. And as I'll go through all the other stocks as well, and everything in my videos is based off of these principles. All right. And I'm here to help you understand the market and educate you how to manage your portfolio, what are the places to take positions, where do the stop loss needs to be, and how to read the structure. Decisions are yours, outcomes are yours, all right? Now, I'm here to teach you and educate you. And here and there, I also give you my plays and everything all the time. Well, I'll do all the time. But my primary intention is to teach you, and because, yeah, I mean, you already know all the plays that I take. It's based off of pretty much the same principles, and I share it with you throughout the videos as well. That's on the side. That's cookie on the side, all right? Now, 550 is the level. Sure, this red candle is coming, guys, after how, like, market has been going up for, what, 100 years now? All right. It has been going up from April, right? So many green candles. This is one just red candle. We had this bearish engulfing candle red back, then here what happened? Market just got bought back up. Like, let the one red candle happen one day. What's the problem? All right. So anyways, guys, gave you the structure. $550 level is still to watch. Look at it, how extended we were away even from 200 hours moving average. What's happening right now is the pullback. The principles of trading, profits in the extensions, let the pullback then happen, right? And then we reload as if the structure holds. Now, as for the intraday on S&P 500, what can I be expecting here? Well, guys, two things. If we get above 557, you can expect a rebound. Little bit. Choppiness rebound is not gonna, I mean, I don't see this thing just now rocketing, but if we get above 557, this thing can crawl its way up there. But be prepared this thing to come crashing, not crashing down, but slowly and slowly crack its way down to 200 hours moving average. That's a very likely possibility. All right. So as we continue to, if the rebound fails at below 20 and 50 hours moving average keep failing, yeah, it can continue its way lower. So just be prepared for that at intraday levels. But overall structure until 550 is still technically spies in an uptrend. It's the pullback right now. QQQ, quite a deeper pullback. I get it. Yes, it's quite a good sell-off. But until the level of 486, what are we seeing? It's the extension. Extension is doing a pullback. Take partial profits in the extensions and let the pullback happen. I mean, take profits in the extensions how much you want and then let the pullback happens. As if we continue to hold 486 and 57 cents, this is the area we are watching. If the rebound would happen, pullback would continue back again to the upside, but that's the level you are watching. And let's take a look at hourly interval. Can we continue tomorrow as well lower? Yeah, that's a possibility. So if we stay below the level of 495 tomorrow, this thing can continue lower. If we get above 495, some rebound may come, but at this point, yeah, I would just see this being rejected at underneath of 20 and 50 hours moving average, guys, at this point, at least for tomorrow. So your bet is now at 200 hours moving average and this level, significant level down here that I provided. So that's QQQ, but please remember structure overall is what? It's still in an uptrend. Now you have to see the price action at this structural level, right, for a potential position. Microsoft. So, and yeah, guys, one more thing. Let's go back to QQQ, guys. And even if market loses 486, yes, some more weakness would come and can come. But guys, $450 down here. Yeah, that's a really good opportunity to again for the market to go. Like if yeah, like I don't, guys, this at least for where the price action is right now, this is not a sign of any big huge crash that we are going back in the $300 range now on QQQ. We'll see the price action how eventually it builds, but as for right now, this is the zones you are watching that I provided. Microsoft. We are down into that blue box, a little bit getting bought back up there. This is a pivotal point for Microsoft actually in the price action. If we stay above 20 days moving average and above blue box, sure, some reboundsment continues still. Yes, technically structure on Microsoft is still bullish. If we lose this blue box, I won't be surprised if we make our way down to 50 days moving average and or this level of 433. So just keep that in mind and accordingly you will take any position if you have to. Yeah, similarly on hourly interval, if we continue to reject below 459 at this point, you can expect weakness on this. And even from here, if we just stay below 200 hours moving average, yeah, we can continue lower. And then it opens up the door to a little bit lower levels as I just talked about. So just be prepared. But if we stay above 20 days, get above 200 hours moving average on the hourly interval and above the blue box, this thing intraday can still continue higher because structure is technically still bullish. Now it's about you have to see the price action at this area for both upside or downside. Accordingly, we'll take the position. Apple, still Apple is like, all right, I'll let the market fall. I'm still gonna be fine. Apple, guys, is still bullish. I mean, 220. Even any pullback until then comes, it's just a pullback, nothing more than that. All right. Take profits in the extensions, and you have that opportunity on Apple already to take the profits in the extensions yesterday. And from last couple of days, partially take out your position, right? Google, technically structure is still bullish. Yes, we have lost 186. But technically structure on this until 20 days moving average is still bullish. If we continue above 186 tomorrow, sure. Some upside. At this point, I won't be surprised if some weakness come, but if we stay below 186, some downside can still continue. But right now, if any cool off still keeps continuing, that will be until 180 with some confidence. So just trade with the levels. We lost 186. So if you stay below that and 20 days is first level, then you can see 180 as well. Otherwise, yeah, no, structure will still, continue its way. Amazon, so cooled off. So this was the level to watch. Two levels, 100 and so 200 and above upside, below 197.94 cents downside. We got that side, and we a little bit got bought back up above 20 days moving average. So, but that was one of the moves, right? That was the move. Now, what is the next move? Well, you have to see how it reacts at 20 days moving average, but this blue box is still a good support, structural support. If the price action holds here, it can crawl, either go in distribution phase or crawl its way up. But this is the zone. If you want to still play long with the stop loss on the other side, you can, when you see the lower time frame price action holding here, you can build into the position and ride the wave little slowly and slowly higher, take partial profits. But what I'm telling you is that this is the structural area. Below this, some more weakness would come than blue box. So that's when you don't want to be trying to play the upside. Amazon also on the hourly interval. This was the area that once it lost today, this was 197.92 cents. That was a weakness. And on intraday level, guys, tomorrow, there's likelihood that any rebound can also continue to be shorted. So intraday and the overall structure, these are two different things. So your trade plan would look different. But yes, I won't be surprised if tomorrow also intraday we do some sell-offs. You are watching this as a resistance level also now, 197.95 cents, right? So some choppiness can be traded to the upside, but then 197 is still a level of potential rejection for at least a day or the recent price action, right? And then we'll see what the price action does then. Meta lost the structure today actually. Losing this blue box is what it was, and we have a lower pivot as well on Meta here. And yeah, if we continue to stay below this blue box, guys, and we continue to stay below 523 at this point, it's just a place that it can be shorted and can continue lower. That was pretty much the level for today as well. We broke it. That was the short play, and as long as we stay below 523 now, this thing can continue lower at the intraday level. And also on the swing, we are just about to lose this line. Pretty much. Once we lose this 20 days moving average with this trend line, it's game slowly and slowly over. Netflix is quite in a deeper candle. Let me just take a look at Meta first on more on the hourly interval. I just want to see the area. Yeah, once we lose this trend line, guys, you can expect much more downside on Meta. We lost that with the 200 hours moving average as well. But anyways, guys, I'm not super mad with these tech stocks falling. This is my opportunity to get into my dividend investing, some of these things that I have been waiting to buy. But more, if you want to know about it, check out this channel of mine, Junior Trader Dividend Investing channel. Link to this channel you will find in the description of this video. And here I talk about everything of all these my dividend things that I'm building. All right, public facing portfolio. All right, so let's go to Netflix. Let's go to the daily interval. And yes, Netflix lost the structure today. The blue box that I provided you from my videos, we lost it. There was no point. We gapped lower, right? That was a structure change on this. Netflix can continue lower now for a couple of days. Even any rebound at 664 is just a downtrend rebound right now. Netflix in a little bit deeper trouble in my opinion. And this thing rebounds on this might continue lower level by level. All right, these are still big cap stocks, so you have to be careful. But yeah, level by level, it can still continue lower in my opinion, unless it can, from where it is, it regains above into that blue box again tomorrow. If it does that, sure. If it can't, it just can continue lower. But yeah, today was pretty much the short play. We lost the blue box. That was the structure area. That was the short play. All right. Guys, that's it for this video. And if you're also interested in checking out other videos that I have done today, that is Tesla, NVIDIA, morning video I did. There's another video that's going to come out on NVIDIA and other semiconductors. So subscribe, and if you haven't done so, to my channel. And with that, guys, I'll see you in my next videos. Take care. Bye.